It looks like everything is going great for Solana. The total value locked, so the capital that's on the chain, continues to rise. It's close to an all-time high. Yet the price is lagging. Why is that? Let's have a look at more on-chain data. Let's try to figure out what's going on with Solana, whether or not it still makes sense to buy. Let's have a look at the data most people are not considering. Now, this is the total value locked in US dollars. The problem is, once we look at the same statistic measured in Solana, this is not growing that constantly anymore. In the last 6 to 7 months, we have just gone sideways. So really, decentralized finance isn't really used that much more on the Solana chain. Yes, the price of SOL went up, but the usage did not. There seems to be an invisible ceiling for the Solana price at $260. We have peaked at that level in 2021 at the height of DeFi summer. We have also peaked at that level when the pump.fun Memecoin trading trend heated up. We then saw a correction and then we came back close to $260 again. Now this is the price in US dollars, but you might know my stance on US dollar charts. The problem with US dollar charts in crypto is that there's a lot of correlation across the assets. When Bitcoin goes up, then Ethereum goes up as well, then Solana goes up as well. When Bitcoin comes down, then most other cryptocurrencies come down as well. So really, what we have to look at is relative valuations. Is Solana doing better or worse than the rest? Is it worth taking on the additional risk versus buying Bitcoin, for example? If the additional risk is not getting compensated with additional return, then it doesn't make sense to take that risk, right? Risk adjusted, we then have less return by buying the altcoin. And so really, this chart isn't as meaningful as this chart here. This is Solana relative to Bitcoin. And here we don't have our invisible $260 ceiling. Here we've got a constant underperformance. Over the span of 3 years, Solana tended to underperform Bitcoin by 39%. Now, there are many possible explanations for that underperformance. It could be tokenomics, as in the supply of Solana tends to grow faster than the supply of Bitcoin, but it could also be demand by Wall Street because of the ETFs and the treasury companies that has way more demand for Bitcoin compared to Ethereum and compared to Solana as well. Have a look at the number of Ethereum that's held by treasury companies. Have a look at the number of Ethereum that's held by the ETFs. And have a look at this combined chart. This is the same for Bitcoin. The treasury companies continue to accumulate. The ETFs continue to accumulate. And we don't really have that in any significant form, at least for Solana. And that, combined with the worst tokenomics, leads to a worse outcome long term. But then, of course, we've got those rallies with subsequent busts, with subsequent rallies again. And so let's have a look at the usage of the Solana chain. Maybe there is a case to be made that this long-term trend could finally get broken. Maybe the usage of Solana justifies an outperformance versus Bitcoin we have never seen before. Now here's the number of transactions on the Solana chain. It tends to slightly grow over time, but it is a very volatile metric. Here we've got the app revenue on Solana. This peaked massively in Q1 of this year. Since then, trends down. And we all know the reason for that peak, right? It was the Memecoin trading. It was the usage of the pump.fun ecosystem. The problem with that ecosystem is that Memecoin trading is a player versus player game. There's no real value creation. There's only capital concentration towards the people that know the market better. And so yes, parts of Memecoin trading is luck, but there's also skill involved. The people that know the data better, they tend to accrue more and more capital over time, and the vast majority of people lose money. And because the vast majority loses money, those people tend to exit over time. So once the capital has concentrated enough, that's then when the ecosystem tends to shrink again. And we are currently in exactly that phase. The number of deployed transactions on pump.fun is constantly going down since Q1 of this year, as is of course the app revenue as well. Now there's a second concerning trend for Solana. It's not just that the app revenue is going down. It's not just that the pump.fun ecosystem has a problem. The real issue is that the secondary rally that we recently saw that brought us close to $260 was not supported by a lot of retail investors suddenly buying Solana. It was supported through short-term leverage, through the perpetual futures. Now, everybody that wants to hold an asset long term just buys it directly on the spot market. So the asset is directly bought. This does have higher transaction fees, but there are no financing costs. Everybody that only wants to short-term speculate on an asset might consider the perpetual futures market, because here transaction fees are smaller, but holding the token is very expensive. We do have financing costs, but we can bet on the price of an asset with leverage. And so the following trend is concerning. This is the trading volume on the spot market. Here is the trading volume on the perpetual futures market. It's growing much, much faster. And so there are more and more bets on the price. There's more and more short-term capital that's dealing with Solana. Most of the time, most perpetual futures traders are betting on rising prices. So the longs have to pay the shorts, or the funding rates are positive. The problem though is that the open interest, so the amounts of bets on the Solana price, is rising rapidly. The spot price is close to its all-time high, but the open interest has grown so much quicker. It used to be at 1.7 billion and now grew all the way to 17 billion. A 10x of speculation on the price, while the price itself didn't really move. And all of that open interest is inherent short-term leverage that could get wiped out anytime. If the short-term price volatility goes against those traders, then we might see an unwinding of all of that open interest, which will then also push down the spot price through arbitrage trading bots. Because have a look at this, there is correlation between the spot price and open interest. When there's more open interest, the spot price tends to be high. When open interest goes down and less people bet on the price, the spot price tends to follow as well. And so seeing record highs in open interest is not healthy. Really, it's quite hard to make that case of a potential breakout versus Bitcoin, especially when we see that the number of active addresses on the chain continues to go down as well. The organic use of the blockchain trends downwards. And I believe a lot of the recent recovery of Solana relative to Bitcoin has to do with increased leverage through the perpetual futures market. This year, the open interest on Solana has doubled, while the price just went flat. There is of course the hope that the pump.fun ecosystem with pump.swap can potentially turn things around. But I do think there's a lot of manipulation going on here, unfortunately. In the last 24 hours, we saw 9.5 billion worth of trading volume on pump.swap. The entire Solana chain only had 12 billion. So the vast majority of trading volume happens on pump.swap, and the pump.fun ecosystem is using all of those fees that get generated through the swaps to buy back the pump token. There had been more than 132 million worth of pump purchases through that program. Yet the pump price can barely keep pace with the overall altcoin market. This is the pump price relative to others. Others is the market cap of all of the altcoins that are not in the top 10. We just went sideways since launch. We even lost a little bit despite this massive buyback program. Really, the fundamental idea is that nobody wants to hold Solana long term. Solana became a meme coin casino. It's very centralized as well. And Wall Street really is mainly interested in Bitcoin to get crypto exposure. Now, I might be wrong. I don't have a crystal ball, but I do think that the Solana dominance will fall from here. Solana, as a fraction of all of crypto, is trading in a range in the last 2 years. It could easily underperform by 24%, but maybe things get even worse. Maybe the historical volatility will come back in case there's a major systemic problem. This, by the way, here was the FTX collapse. Maybe the wash trading on pump.fun will get questioned at one point. That, of course, would bring down Solana massively with an underperformance of 84%. We have seen this in the past, so this is not necessarily something that's completely out of the question. Now, isn't it fascinating how for most altcoins, the movements to the upside tend to be much, much faster compared to the movements to the downside. We shoot up and then over a long time, we trickle down. Here's the example of Dogecoin Dogecoin relative to the others market cap. So when there's news, when there's a lot of attention, the Dogecoin price shoots up within 1 or 2 days to then come back down over several months. We're seeing the same for the Trump token. We shoot up. This was the announcement of the dinner. And then subsequently, we come back down. There is a difference though between Dogecoin and the Trump token once we zoom out. So again, this is Trump relative to the others market cap. So the market cap of all of these smaller altcoins, and here is Dogecoin relative to the others market cap. So while we do have our pump and dumps in both cryptocurrencies, the long-term trend is very different, as in Dogecoin just goes with the overall market. It simply just trades in a somewhat constant range, while Trump tends to long-term underperform. And there is a fundamental reason why Trump underperforms long-term, and that is tokenomics. It's new tokens that hit the market over time. Have a look at the following data. This is the number of Trump tokens that get released over time. We started off with 200 million. Now we are at 363 million. So it's the early investors, it's the team, etc. that cashes out over time. And that selling pressure, those vesting unlocks, that dumping on retail, that's what's creating the long-term underperformance. Now, some people say that markets are efficient and that everything is already priced in, but I don't think those charts show that. There is inefficiency, and we can simply turn this around. Let's say we've got Bitcoin relative to the Trump token. Then we're getting this chart here. So since Trump launched, Bitcoin outperformed the Trump token by 560%. This is how I believe we can make money in crypto. It's not trying to find the one outperformer among all those altcoins that always go down. It's doing the exact opposite. It's trying to be allocated in a way that we make money when the insiders and the early investors make money as well. When they are dumping on the average retail investor, we make money because things like Trump tend to underperform long term. As long as the token dilution continues, as long as new tokens hit the market, this chart is very likely going to go up. I'm making money with that strategy already for 4 years. This is a monthly chart. Had I just dollar cost average into Bitcoin, I would have gotten the return here in light gray. Instead, I got the return in black because I also bet on falling prices of various altcoins. It is a mistake just looking at US dollar charts. Really what matters is your portfolio value measured in Bitcoin appreciating over time? If the answer is yes, you're probably doing something right. If the answer is no, then you might just so stick with Bitcoin and dollar cost average into Bitcoin and stay away from altcoins altogether. The Trump meme coin is just one out of many examples. Most altcoins have an increasing supply, and so here with Balancer relative to Bitcoin, so we go long Bitcoin, we bet on falling prices of Balancer, we can get this long-term chart. The strategy looks quite straightforward. There are a few caveats though. So for example, here with the Bitcoin to Balancer chart, we do have a lot of volatility along the way. Where does this volatility come from? It comes from small market caps. There is some token manipulation. There is some short squeezing happening along the way. And the smaller the market cap is, the more volatility we invite. So while the strategy is long-term profitable, we have to be aware of the potential pitfalls as well. And so I made dedicated videos on the topic. How can we actually make money from those inflating altcoins? Most altcoins do poorly and we don't have to find the needle in the haystack. The one altcoin that does well, we can just bet on the haystack continuing to go down because, again, the early investors, the VCs, they cash out and they dump on the retail investor. There are two important videos to watch: using perpetual futures on hyperliquid and risk management with relative valuation bets. It's half an hour each, so in total 1 hour of content. And after you've watched that, you know what to do in order to set up positions like this. Now, this here is currently my favorite trade. So this is the position that I will recommend to you once you have joined the premium membership. So you watch those 2 videos, you join the community. Afterwards, I will send you what to do in order to set up this trade. If you don't make money with that trade after holding it for 1 month, then I'll refund you your membership fee. I'm that confident in the strategy that you can simply just open that position, And if you're in the red, I don't want your money. The fee, by the way, is $125 per month. Again, if you don't make money with that trade, I will refund that. But of course, it's a monthly fee. So I share all of my trades in real time with the premium members. So for example, over here, this is where I closed a short position on the movement token. Move was also highly inflationary. We opened this over here where we were at the upper end of the trading range on a relative valuation chart. So we always look at the altcoin relative to the rest of the market. And then when we make quick gains, when we get closer to the lower end, we might also take some profit and wait until we go back again to the upper end of the trading range. I know at the beginning this strategy can be a bit daunting, but again, there is support in the different chats. There's also moderators that can help with any questions you might have. So feel free to check it out. The link is directly over here. Just click on the screen. It will lead you to the premium website. If it's the very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.